One of the biggest misconceptions I see with CMHC eligible multifamily is this: if I can borrow more, I should borrow more. On paper, commercial lending massively expands your buying power. But in practice, the investors who grow the fastest are usually the ones who don't max out leverage on their first deal. Because the fastest way to scale with CMHC isn't aggression, it's control. If you're new here, welcome. And if you've been following along, thanks for sticking with me. A lot of investors reach CMHC for the first time and feel like they've unlocked a cheat code. So today, I want to explain how commercial borrowing power really works and why using all of it too early can actually slow you down. Here's something many investors don't realize. Commercial borrowing power is separate from residential borrowing power. Using CMHC for multifamily does not reduce your ability to borrow on the residential side. That means if you've only been investing with residential mortgages, you're likely leaving capital on the table. Commercial lending opens an entirely different door, and once investors see that door open, the instinct is often to sprint through it. That's where problems start. In many CMHC eligible commercial deals, investors can often borrow up to roughly 4 times their net worth. Now, this is not a promise and it's not automatic. It depends on asset quality, DSCR, liquidity, and operator experience. But here's the key takeaway. Your commercial buying power is usually much higher than you expect. And just because you can borrow it doesn't mean you should. This is where I see first-time CMHC investors get into trouble. They max out commercial leverage, leave no margin for error, underestimate execution risk. Your first CMHC deal isn't just a financial decision. It's an operational test. You're learning stabilization, property management, lender expectations, CMHC reporting, real-world problem solving. If everything goes perfectly, great. If it doesn't, you want room to breathe. The smarter approach is controlled leverage. Start with a deal that works conservatively, leaves buffer in DSCR, doesn't exhaust your buying power, keeps liquidity intact, execute it cleanly. That single well-run deal builds lender confidence, speeds up your second acquisition, and compounds growth far faster than an aggressive first move ever will. Scaling isn't about buying more, it's about surviving and mastering the first one. Commercial leverage is powerful, but power without discipline creates fragility. If you're entering multifamily through CMHC, the goal isn't domination on deal one, it's control. That's why starting with the right structure matters, and why leaving yourself room to grow is what unlocks long-term scale. See you next week.